Could gold be making a comeback as the world's most important monetary asset? What could this mean for global economies and the future of international trade? To answer these questions, we need to journey back to the year 1971, a landmark year when President Nixon made a decision that would alter the course of global economics. He disconnected the dollar from gold, effectively ending its use as a currency and turning it into a commodity. This decision had far-reaching implications. It not only transformed the way economies functioned, but also shifted the balance of power in the global financial system. The once mighty gold, which held sway over the monetary policies of nations, was now reduced to a tradable commodity, its value subject to the whims of the market. And so, gold was relegated to the status of a mere commodity in the West. But is this the end of the story? As gold was losing its shine in the West, a new economic force was rising in the East. The BRICS nations, Brazil, Russia, India, China, and South Africa, were surging forward, wielding their growing economic power with confidence. They began to shift away from the dollar, traditionally the global reserve currency, and started using their local fiat currencies for international transactions. This wasn't a change that happened overnight. It was a slow, methodical move, carefully calculated and executed. And it wasn't without its implications. The dollar, once the unchallenged king of currencies, was beginning to feel the pressure. Its reign as the global reserve currency was being questioned, its dominance threatened. As the BRICS nations continued to rise, the dollar's position continued to wane. The economic landscape was changing, and with it, the balance of power was shifting. The shift away from the dollar is a clear signal of changing global economic dynamics. But where does gold fit into this new picture? While the West continued to view gold as a commodity, China was quietly amassing a golden treasure. Following the real estate crisis involving Evergrande and a downturn in the stock market, China took a different economic approach, one that harkens back to a time when gold was not just seen as a precious metal, but a cornerstone of economic stability. China's central bank, the People's Bank of China, embarked on a large-scale gold purchasing spree, adding an impressive 225 tons to its reserves in 2023. This move was not a knee-jerk reaction to their economic challenges, but rather a strategic decision that serves as a testament to gold's enduring value. But China's commitment to gold goes beyond just buying more of it. The country has also shifted its approach to reporting its gold reserves. What used to be a four-yearly event has now become a monthly affair. This increased transparency is not just for show. It sends a powerful message to the world, and more specifically, to their trade partners. China is betting on gold. By putting gold front and center in their economic strategy, China is challenging the traditional Western view of gold as merely a commodity. They're not just buying gold to hedge against economic uncertainty or to diversify their portfolio. They're buying gold because they believe in its intrinsic value as a monetary asset. Gold is not just a shiny metal that people buy when they're worried about the economy. It's a tangible asset that has maintained its value throughout history, regardless of economic conditions. And now it seems China is leading the charge in recognizing this. China's actions are a clear signal that the country sees gold as more than just a commodity. Could this be a sign of gold reclaiming its place as a monetary asset? So what does China's love for gold mean for the rest of the world? Well, it's a clear signal that the East is shifting away from the dollar and instead placing their trust in tangible assets like gold. This trend is not isolated to China alone. Russia and other non-Western countries have also been amassing gold reserves, indicating a global shift in economic strategy. In a world where the dollar's power as a global reserve currency is waning, gold is reclaiming its historical status as a reliable store of value. China's continuous gold purchases, even during economic turmoil, highlight its long-term vision and faith in gold's enduring value. The West needs to take note. With China at the forefront of this activity, the world is likely to see a resurgence in the importance of gold as a monetary asset. The future of gold is uncertain, but one thing is clear: its story as a monetary asset is far from over.